You're listening to Pre-Market Prep. I'm Brianna Valesky with my co-host Joel Elcon, and we're joined by Ann Logue. She is a consulting analyst and the author of Day Trading for Dummies. Ann, thanks for joining us this morning. How are you doing on this Wednesday?
Oh, I'm fine, thanks.
You are
enjoying this beautiful summer weather.
Absolutely. We are lucky enough to get some of that in Michigan right now as well, so we're definitely enjoying it. You're also the author of Emerging Markets for Dummies, and one emerging market that's been on a lot of people's radars lately is China. Incredibly volatile stock market. The government's doing everything it can to prop it up. What have you been watching in China over these past couple weeks?
Well, China is such an interesting situation.
Absolutely.
Because it is still officially a communist dictatorship, basically. And we forget that a lot because the country has been so incredibly dynamic in terms of its modernization and in terms of its embrace of capitalism. But it's definitely this capitalism with a communist perspective underlying it.
Mm-hmm.
And the government has a lot of control in the economy. It is not using that old-fashioned method of central planning that was embraced by Mao. People are not trying to, make steel in their backyards anymore, obviously. But there's still a lot of government intervention in different types of industrial and commercial activities. And the government's primary concern is always full employment, both because of sort of this ideological basis that they have, but also for very practical reasons. This is a country of 1 billion people. It is a lot of people. It has, because of the one-child policy, it has a disproportionate number of young men, and it has to keep these people working. So a lot of its policies have been driven by that, and that sometimes conflicts with corporate profits. That sometimes conflicts with stability, with economic stability. And I think that the government, if it, all else being equal, the stock market is low on its list of priorities of different economic indicators or different economic sectors to maintain. I don't think that China itself is a problem right now, but I think that the interests of investors are not a priority, and I think that's what one of the things we're seeing play out here. China is a country with enormous risk. It's enormously exciting. There's enormous opportunities, but I think the risks are really there. But I think one of the things to keep in mind is that because the country has so much risk, the wealthy people in China have been diversifying their own portfolios by buying U.S. bonds and U.S. real estate. And that has really, the U.S. government can continue to borrow money at practically 0% interest because people in China have been moving money here. And I think that this is something, everybody's watching to see if the Fed is going to raise interest rates. The Fed doesn't have to raise interest rates, even though the U.S. government has this enormous deficit to finance, because the money just keeps coming from China in particular, and to a lesser extent from Russia and South America. And I think something really interesting to keep in mind for those of us in the United States is that for all of the problems we have here, and we have some problems, but right now when you look at the rest of the world, we're in pretty good shape, which is a little disconcerting. But that gets back to why our interest rates are so low. It's not just because of the Federal Reserve, it's also because the supply of money coming in is so huge, and as China has problems, that's not going to let up. So this is very good for Vancouver real estate, very good for U.S. government bonds, probably not as good a deal for people looking to invest in China. And for many years, part of the play has been Chinese companies that are listed in New York but even that doesn't give you a lot of stability. When push comes to shove, the government in China is going to look out for its own interests, and its interests are not those of the capitalists per se. So a little bit different. I think in the U.S. we've gotten very much used to a situation where the banks have an ear in Washington that maybe we wish they didn't have, but it is not that way in China at all.
You mentioned Chinese companies listed, on the New York Stock Exchange and here in the U.S. What do you think about those? Are those just kind of a little volatile? Are they a safe investment for someone in the U.S. looking to kind of get into China?
I think they're maybe slightly safer because the companies do have to meet listing requirements here, but I wouldn't say they're enormously safer. So, China is going to be a ride. Like anything, for people who are day trading, for people who are looking very short term, that can create a lot of opportunities in that. When you have a lot of volatility, you have a lot of intraday opportunities to buy and sell. But I think longer term, if you're looking for a longer term position, China is one to underweight for now, unless you're feeling really lucky. I think it is amazing when you consider how far this country has come. It is amazing when you consider that 60 years ago, Mao was having people melt down all of their household pots and pans in his attempt to have backyard steel mills. Really, that is like the most bizarre thing in human history,
Right.
the whole idea of backyard steel mills in the 1950s. But, there was enormous devastation in that country as a result of the Great Leap Forward and the Cultural Revolution. And when you realize how far they've come, it is absolutely amazing. It is almost on the order of a, wonder of the world. But that doesn't make it a great place for investors right now. And the government is very concerned about employment, and that is going to take priority over anything else. They've got 1 billion people who have to work, and they especially have an issue with this disproportionate number of young men, and that can cause a lot of instability if they can't keep those people working.
Great point, Annie. China's a fascinating place, but maybe not the best for investors right now because their government's more concerned about, their own people and making sure that they're employed. So a fantastic point and really great way to put it in perspective. Let's kind of shift focus over to Europe. Obviously, there's been a lot of news coming out about Greece, but what are you seeing in the Eurozone right now?
Well, again, for all the problems the U.S. has, our dollar is quite strong. The dollar is as strong against the euro as it's been in, really since for over 10 years. It's interesting to me that the EU has once again decided to keep everything together. That I'm trying to decide if this is, a model of diplomacy, a model of people working together, or if the Germany is some kind of battered spouse that puts up with anything that Greece pulls at it. They're keeping it together. Greece is once again going to stay in the euro. Greece is once again going to stay in the EU. England is quiet on its issue about whether or not it's leaving, and it's staying together. And so this is actually pretty good for investors in Europe. It is not so good for Greece. But the Greek economy is really small, and again, It's a situation where the wealthy people have moved most of their money overseas anyway at this point, buying real estate in London or New York, having cash in the U.S. markets. So, that there is an interesting situation where maybe the wealthiest people aren't as affected by what's happening at home. And the Greek economy it's about the size of Connecticut, which, Connecticut's a wealthy state, but it's not like this is as pivotal to the state of the world as the rest of Europe. As long as the rest of Europe keeps it together, then I think there's some good opportunities for investment, particularly looking at ways to play a strong euro, and that is, or ways to play a weak euro, a weak euro, strong dollar, strong yen, and that's going to be particularly companies that are exporting to the rest of the world. So I mentioned before some retailers. There's Inditex, which is the parent company of Zara, which is a fast fashion retail chain that has been rapidly expanding into the U.S. and into Asia, in large part because the management in Madrid wants to diversify away from its exposure to the euro. And I think there's a lot of, looking at companies that are exporting, looking at companies in Europe that have customers in the U.S. In the case of Germany, that's going to be very much the industrial companies. That's going to be the automakers. Maybe this is a good thing for the new Fiat Chrysler, because they have such exposure to, getting Fiats into the rest of the world. But the fact that it's stable does reduce a lot of the risk for long-term investors or even medium-term investors. It means that you're less likely to be blindsided than we would have said a month ago, right? A month ago, we were waiting for the election in Greece. We were waiting for everything to fall apart. My guess is that Greece will hit another crisis in a year or two or maybe three, but there is a commitment to staying together. And again, I don't know if that's diplomacy. I don't know if that's a battered spouse, but
Right. Is it like, because Angela Merkel has come out and said, if the European Union fails, if the euro fails, then Europe fails. So it's
yeah.
just, is it diplomacy or is it kind of desperation at this point? But you have written quite a few books: Emerging Markets for Dummies, Socially Responsible
hmm
Investing for Dummies, Day Trading for
hmm
Dummies, Hedge Funds for Dummies, and you're currently working on another one. Can you tell us about
Yes.
that?
I am working on the Complete Idiot's Guide to Options Trading. And very much, if anybody on Twitter wants to send me any questions of anything that they think I should cover or any ideas, I'd love it. It's Annie Logue, ANNIELOGUE, on Twitter. That's been very interesting because we've seen the exchanges introduce some new products that are really changing the time of options, because they used to be sort of 180, not 9 months at most was a long expiration, but the CBOE has the leaps, which have a couple years expiration. They've been expanding their weeklies, which essentially have no time value. So they've now come out with a weekly option on the VIX, so that expires every Friday, and that means you're essentially trading the VIX with no time value or hardly any time value. So much more based on real time, and that's been fun to look at, and it's been really fun to look at ways that people can just pull out payoff from the underlying asset. I have been having fun with that because most of the stuff I've worked on traditionally has been looking more at underlying asset valuation. So that's been a lot of fun, and I am looking for ideas for things that I should include if people want to send me anything. And that is keeping me pretty busy right now.
We're on
So.
the line with Annie Logue. She's a consulting analyst and the author of Day Trading for Dummies. Annie, when you're doing your research for the book here, I know you probably start out and like the pitfalls or things in options trading. What do you think that is like the biggest misunderstanding about options that kind of keep people away from it?
Well, the biggest misunderstanding is that it's risky, and of course, half of options are purchased by people who are looking to hedge. And if there wasn't a hedge in there, there would be there'd be no market. And a lot of option strategies are actually designed to play very small price changes, so they have very minimal risk. The problem with that, of course, is that a lot of options traders report to me that they're disappointed because they thought it would be easier to make big profits. They were expecting they understood the risk of big losses, but they thought that they'd also have big hits, and they're sort of like, wait, a big gain is a couple dollars, and it's like, yeah, but over time it adds up. So I think that is that's probably the biggest misconception, that there's massive profits, and for a retail investor, it's hard to get enough scale for that, but that's an issue. The other thing I'd say is that I don't know if it's a misconception or not, but options are pretty mathematical, and I've been having some fun at just thinking about how the math of them works. But if somebody's not comfortable with that, it might be more difficult for them to embrace the idea of an option, because it's less looking at a chart and it's less trying to research the background of what's happening, and a little more trying to figure out where the movement would be if a change happens. So, when you have this element of time in them, because time is changing constantly, that means that element of the price is changing constantly. And so that is actually an appeal of the weeklies for people who are doing short-term trading, because it does pull out that element of time. But for the rest of us, you're sort of like, whoa, what do you do?
Annie, before we let you go, you talked about a Spanish stock, I think, the last time you were on, and I can't remember what the symbol is. I think it was a Spanish retailer. What do you have?
It is IDEXY.
IDEXY.
It is Industria de Diseño.
Oh, Annie. It's doing good. It's
the parent company of Zara. They own some other brands. They're sort of the Spanish version of Gap, but they are, I think it's an interesting play on the euro with the European company, because they're based in Europe. But they're expanding rapidly to diversify their portfolio, to reduce their euro risk. But for the time being, that's really good, because that means that their profits coming in from dollars or yen or Australian dollars are relatively high. So,
next time we have you on, we're just going to talk about stocks. We're not going to talk about your books anymore. This is a pretty good pick since you've been on. But thanks for coming on, Annie Logue, consulting analyst and author of Day Trading for Dummies. She's also working on another book, Day Trading Options for Dummies. So we're looking forward to that coming out. Anne, thanks for coming on. We'll speak to you again soon.
All right. Thank you so much.